Hello and welcome to this video. We are going to discuss about the best Nifty 50 stocks with the complete details. Nifty is a market index introduced by the National Stock Exchange. It is a blended word National Stock Exchange and 50 coined by NSE on the 21st of April 1996. It originates from two words national and 50. There are 50 actively traded stocks from 12 different sectors, namely auto, private banks, public sector undertaking banks, FMCG, pharma, IT, metal, infrastructure, media, consumer durables, oil and gas, financial services, and reality. Nifty 50 represents the weighted average of India's top 50 companies that are listed on the National Stock Exchange. Let's look at some of the most important stocks, starting with HDFC Bank. HDFC Bank is an Indian banking and financial services company headquartered in Mumbai. It is India's largest private sector bank by assets and world's 11th largest bank by market capitalization as of April 2023. It is the third largest company by market capitalization with $121 billion on the Indian stock exchanges. This bank provides a number of products and services, including wholesale banking, retail banking, treasury, auto loans, two-wheeler loans, personal loans, loans against property, consumer durable loan, lifestyle loan, and credit cards. So if you look at the performance of this bank, it has been an increasing trend starting from January 1999. So if you would have invested an amount of 5 rupees and 52 paise during 1999 with an investment of 10,000 rupees, you would have had a total shares of 1,811 numbers. And that 1,811 numbers of shares would have given you a whopping 29.86 lakhs by this time. So, which is an amazing result. And this company continues to grow. Let's look at the fundamentals of this company. The company has delivered a very good profit of 20.59% over 5 years. And the company has been maintaining a healthy dividend payout of 19%, and also the return on equity with 16.56% for last 3 years. The bank has been maintaining a healthy ROA of 1.9% since last 3 years. So that's been amazing return on assets of this company. If you see the peer comparison, the HDFC Bank lists number one in the banking space with a market capitalization of 9,23,908. That's been really amazing. If you look at the performance of the company, the revenue is in an increasing trend from 1,05,160 to 1,70,754. And if you see the net profit, it has been in an increasing trend from 22,446 to 46,149. That is a phenomenal numbers. The EPS is in an increasing trend, and return on equity has been very consistent. If you see the shareholding pattern of the company, the promoter is holding a share of 25.59 percentage, foreign institutional investors having 32.2 percentage, domestic institutional investors participation is at 28.3 percentage, public is having 13.8%, and others with negligible amount. The performance of the balance sheet, it has got very good reserves and surplus. If you see on March 2019, it has got 1,53,128 crores to 2,88,879 crores. So it's been amazing. The company has been growing really well, and it keeps giving good growth for investors. So this stock is one which has been considered for long-term growth. Let's move on to another company, Reliance Industries. As we all know, Reliance is a very good, big Indian conglomerate company headquartered in Mumbai with business includes energy, petrochemicals, natural gas, retail, telecommunications, mass media, and textiles. Reliance is the largest public company in India by market capitalization and revenue. The company is ranked 100th on the Fortune Global 500 list of the world's largest corporations as of 2022. So this is one of the most actively traded stock in Nifty 50. And if you see the stock of this company, it has been an increasing trend. Started at July 2002 with a share price of 53 rupees. And that 53 rupees, if you would have invested 10,000 rupees, you would have had shares of 188. And that, as of now, you would have got a profit of 4.67 lakhs. That's been a phenomenal number. If you look at the key fundamentals of the company has got a good network in various domains. Company has got a very good cash flow management to expand and increase the operations. The company has got a very strong decisive leadership. The, the company is having a market share of 17 lakh 15,888 crores with return on capital employed maintaining a steady 10 rupees and 10.14 percentage. If you look at the revenue of the company, it is in an increasing trend from 5,69,209 crores to 8,92,944 crores. And if you see the net profit, it is again in an increasing trend from 39,734 to 74,131 crores. Company has having a very good EPS from 66.82 in 2019 to 98.59 in presently in 2023. The return on equity has been very constant. If you look at the shareholding pattern of the company, the promoter is having a percentage of 50.41. Foreign institutional investors participation is at 22.4%. Domestic institutional investors participation is at 16.24%, and the public is having participation of close to 11%. If you look at the balance sheet of Reliance, it has got a very huge reserves and surplus starting from 3,81,186 in March 2019 to 8,14,387. And the company is having a very good cash and cash equivalent from 11,081 crores to 74,708 crores. So this shows a very good potential, and it again keeps to give a very good growth for the retail investors. And this is also another stock which has been really worth considering investing for long term. Moving on to another stock, this is a Tata Consultancy Services. As we all know, Tata Consultancy Services is an Indian multinational information technology services and consulting company with its headquarters in Mumbai. It is a part of the Tata Group and operates in 150 locations across 46 countries. It was reported that Tata Consultancy Services had overall 6 lakh employees worldwide. TCS is the second largest Indian company by market capitalization and is among the most valuable IT services brands worldwide. Again, the stock of the company is presently trading at 3,213 rupees. Started at August 2004 with a stock price of 120 rupees. You would have had total 83 shares if you would have invested close to 10,000 rupees during that time, which would have given a return of 2.57 lakhs. One of the leaders in the IT segments. Let's look at the fundamentals of this company. The company is pioneer in IT services and almost debt free. The last 3 years return on equity is 43%. The company has been maintaining a healthy dividend payout of 61.4%. And the company is having a strong decisive leadership. Look at the market capitalization of the stock, which is a huge numbers. If you look at the performance, the revenue is in an increasing trend. Net profit is also in an increasing trend from 31,562 crores to 42,303 crores. EPS has been in an increasing trend from 83 rupees to 115 rupees. Return on equity is also very good from 35.18 to 46.61. The shareholding pattern of the company is like this, that promoter is having 72%. Majority of the share is with the promoters. Foreign institutional investors having 12.72%, domestic institutional investors having 9.6%, and others having 5.3%. If we look at the balance sheet of the company from March 2019 to 23, the company is having a share capital of 375 crores. Till now, it is 366 crores. Very important to see that the company is not having any debt. Long-term borrowings absolutely zero, which is a very good sign, and the short-term borrowing also zero. So that shows how potential and how efficiently the company is managing with the funds. The cash and cash equivalent is having a very good numbers starting from 12,848 to 11,032 crores. And another company from the list is Infosys. Infosys Limited is an Indian multinational information technology company that provides business consulting, information technology, and outsourcing services. The company was founded in Pune and it headquartered in Bangalore. Infosys is the second largest Indian IT company after Tata Consultancy Services. So the present share is at 1,265 rupees. It is currently trading. And this is started on January 1999 with a share price of 11.59 rupees. So if we would have invested an amount of 10,000 rupees, we would have got a share of 862 numbers. And presently that would have given a yield of 10.8 lakhs. If you look at the current fundamentals of this company, the company is pioneer in IT services and almost debt free. The company's last 3 years return on equity is at 29.4 percentage. The company has been maintaining a healthy dividend payout of 58 percentage, and the company has got a very strong decisive leadership. So if you look at the peer comparison of the company, Infosys ranks second compared to TCS with a market capitalization of 5,25,269 crores. And if you see the revenue and net profit performance, the revenue presently stands at 1,46,767 crores compared to 82,675 crores in 2019. Similarly, if we see the net profit, it is in an increasing trend presently with 24,108 crores presently in 2023 compared to 15,410 crores. And EPS shows a very good increasing trend along with ROE, return on equity, which is again in an increasing trend from 23.71 percentage in 2019 to 31.95 percentage presently in 2023. And if we look at the shareholding pattern of the company, the promoters having 15.14 percentage, foreign institutional investors participation is at 35.09 percentage, 33.86 percentage is with domestic institutional investors. Public participation is with 15.59 percentage and others are with negligible percentage. Now let's look at the balance sheet of Infosys. The reserves and surplus, the company had 62,551 crores in March 2019. And see how it has been increasing from 62 crores in 2019 to 63,000 crores in 2020. And presently it is with 72,460 crores in March 2023. And the most important thing to see here is the company is having nil debt, absolutely no debt. Short-term borrowings also zero, which means long-term borrowing zero and short-term borrowing zero, which is a very, very good sign for a company. Also, the company is having a very good cash and cash equivalent of 12,173 crores presently. Now, other stock on the list is Housing Development Finance Corporation Limited, otherwise called as HDFC, is an Indian private development finance institution based in Mumbai. The company provides housing finance to individuals and corporates for purchase or construction of residential houses. It is a major housing finance provider in India with presence in banking, life and general insurance, asset management, venture capital, realty, education, deposits, and educational loans. So presently, this stock is trading at 1,642 rupees. Traded started trading at Jan 1999 with a share price of 5 rupees and 52 paise. So again, we would have got a share of 1,811 numbers if we would have invested 10,000 rupees during that time. Look at the performance. It has given a very, very good performance. So if you would have invested during that time, you would have got an amount of 29.6 lakhs at this point of time. Let's look at the key points of HDFC. The company offers very good corporate governance. Last 3 years return on equity is 29.4 percentage. The company has been maintaining a healthy dividend payout of close to 26%, and this is a very steady and strong performance in terms of credit growth, stable asset quality, and superior return ratios. In banking space, HDFC ranks number one compared to the other companies. Now look at the revenue of HDFC started in 2019 with 95,959 crores to 1,52,942 crores presently. The net profit is an increasing trend from 10,190 crores in 2019 to 16,534 crores. EPS is an increasing trend from 95.4 crores in 2019 to 143.77 crores presently. ROE has been very consistent from 14.52 to 12.98%, which has been really good. If you see the shareholding pattern of the company, the foreign institutional investors' participation is at 66.2%. Domestic institutional investors' participation is at 22.53%. Public has been contributed 11.25 percentage and others with very negligible amount. If you look at the balance sheet of HDFC, March 2019, the company had 1,10,243 crores reserves and surplus, and now presently it is with 2,01,107 crores. Look at the performance from 1,10,000 to 2,01,000. It's been very amazing. And most important to see, the long-term borrowings has been in a decreasing trend. Presently, the company is debt-free. Company short-term borrowings should be there, but that is not a major concern of the company. So this company is also on the radar for other retail investors who had who is looking for to invest for a long term. The company is having a very good cash and cash equivalent of 3,462 crores presently in 2023. The other bank in the Nifty 50 list is ICICI Bank Limited. ICICI is an Indian multinational bank and financial services company headquartered in Mumbai. It offers a wide range of banking products and financial services for corporate and retail customers. It has got a variety of delivery channels and specialized subsidiaries in the area of investment banking, life and non-life insurance, venture capital, and asset management. This company is a very good financial institution which has got a network of 5,900 branches and 16,650 ATMs across India and has a presence in 17 countries. So the company has got a very good global presence. If you see, the company is presently trading at 924 rupees, started at Jan 1999 with a share price of 4 rupees and 8 paise. The company would have given a profit of 22.5 lakh rupees if it would have invested 10,000 rupees during that time. If you look at the key fundamentals of this company, again, just like HDFC Bank, this company has also got a very strong growth and good corporate governance. And the company has delivered a very good profit of 34.6% cumulative average growth return over last 5 years. The company has also delivered a good profit of 90% over the last 3 years. And the bank has outperformed the Nifty and Bank Nifty in 2022. That is a very good sign. If you see the peer comparison, ICICI ranks second compared to HDFC Bank. And look at the performance of revenue, net profit, earning per share, and return on equity. It's been giving a very good increasing performance. Revenue stood at 71,981 crores in 2019. Presently, it is at 1,21,066 crores in 2023. Net profit had been jumped from 5,689 crores to 34,463 crores. That's been a very good percentage. And return on equity is from 3.72% to 15.86%. The shareholding pattern of the company, 44.16%, is being held by foreign institutional investors. 45.6% domestic institutional investors is holding. Public is having a share of 10.23% and others with negligible percentage. Now, if you look at the balance sheet of ICICI Bank, March 2019, it had a reserves and surplus of 1,289 crores, and presently in March 2023, it is at 1,396 crores. The other important thing to notice here is the contingent liabilities. March 2019, it had a very, very big numbers, and presently it is zero. That is a very good sign of a very good company. Now, the other stock in the list is Larsen& and Toubro, otherwise called as L&T, is an Indian multinational conglomerate company with business interests in engineering, construction, manufacturing, technology, information technology, and financial services. The company is counted among world's top 5 construction companies. As of March 31, 2022, the L&T Group comprises 93 subsidiaries, 5 associate companies, and 27 joint ventures spread across 35 jointly held operations. If you look at the present share, it is trading at 2,392 levels, and it started its journey in Jan to 1999 with a share price of 18.22 rupees. So again, the investment of 10,000 rupees during that time, one would have held a share of 548 numbers, and that would have given 13 lakhs profit presently. On key fundamentals, L&T is a steady compounder with attractive sales growth of 12 to 15 percentage. It has got a very good competitive advantage from transparency, cutting edge technology, and superior project management skills. The company has delivered a very good profit growth of 90.74% over the past 3 years, and the company has been maintaining a very healthy dividend of 37.2 percentage. So if you see the peer comparison, L&T stands first among the other companies. If you look at the revenue, it has been maintaining a very steady progress from 1,35,220 crores in 2019 to 1,83,340 crores presently. Net profit jumped from 9,668 crores to 12,624 crores, and the earning per share has been in an increasing trend from 63 crores to 74.51 crores. Return on equity is also maintaining a very steady progress. If you look at the shareholding pattern of the company, foreign institutional investors having a percentage of 24.48 percentage, followed by 39% from domestic institutional investors, and public contribution is with 36.52%. So if we look at the balance sheet of Larsen and Toubro, it had a reserves and surplus of 49,660 crores in March 2019, and presently it is with 71,246 crores. So if we see, it has been gradually increasing from March 2019 to March 2023. So which means the company is getting a lot of projects from the Indian government and also the other companies. So this shows how efficiently they are managing and contributing to the growth of the company. Also, the cash and cash equivalent has been very good with close to 5,000 crores. That is a good numbers. Moving on to another company, Hindustan Unilever, the name is very synonymous with all the households in India. This company is pioneer in consumer goods, headquartered in Mumbai. It is a subsidiary of the British company Unilever. Its products include foods, beverages, cleaning agents, personal care products, water purifiers, and other fast moving consumer goods. So this stock is trading presently at 2,647 levels. Started its journey on Jan 1999 with a share price of 160 rupees. So if you would have invested 10,000 rupees during that time, one would have held 60 numbers, and that would have given a profit of 1.48 lakhs presently. The key points of Hindustan Unilever Limited: company is a market leader in FMCG segment with 90 years of heritage and is a debt-free company. Company has a very good return on equity with 21.6% over the last 3 years, and the company has been maintaining a healthy dividend payout of 99.9%. The company has its presence across the length and breadth of India with over 8 million plus retail stores. That is a very big numbers. If you look at the peer comparison, Hindustan Unilever ranks first in the FMCG space with a very good numbers in market cap. The revenue numbers are presently with 60,580 crores compared to 39,310 crores in 2019. If you look at the net profit, it is in an increasing trend. On 2019, it was 6,060 crores and presently it is with 10,145 crores. That is a huge profit. If you see the EPS earning per share is in an increasing trend from 27.97 percentage in 2019 and presently it is with 43.07%. The return on equity is presently on 20 percentage compared to 76%. It is very less, but for a company like Hindustan Unilever, we can consider this as it gives a very good return over the period of time. The shareholding company looks like this. The promoter is holding a share of 61.9 percentage, foreign institutional investors having 14.36%, domestic institutional investors having 11.57%, and others with 12.15%. The balance sheet of Hindustan Unilever, March 2019, they had reserves and surplus of 7,627 crores, and presently it is with 50,069 crores. That is more than 4-5 times. Long-term borrowings and short-term borrowings are absolutely zero, which means this is a debt-free company. So this is having a very good 5-star balance sheet. And look at the cash and cash equivalent, phenomenal. Again, 4,678 crores presently. Now, finally, moving on to another company on paints and coatings space is Asian Paints Limited. This is an Indian multinational paint company headquartered in Mumbai. The company is engaged in the business of manufacturing, selling, and distribution of paints, coatings, products related to the home decor, bath fittings, and providing of related services. Asian Paints is India's largest paints company by market share. The company's manufacturing operation encompasses 15 countries of the world, including India, with considerable presence in the Indian subcontinent and also in the Middle East. So presently, this share is trading on 3,297 levels. This has started its journey on Jan 1999 with a share price of 11.8 rupees. So obviously, an amount of 10,000 investment, one would have received a share of 841 numbers, and those numbers would have given a total profit of 27.62 lakhs. The fundamentals of Asian Paints looks like this. The company is virtually debt free, and the company has been maintaining a healthy return on equity of 27.12% over the last 3 years, and it has given 26.1% return on equities track record for last 3 years. The company has been maintaining a healthy dividend payout of 58.4%. And if you look at the peer comparison, Asian Paints ranks number one on the painting category. So if we see the revenue and net profit of Asian Paints, the revenue stood at 19,240 crores in 2019, and presently it is at 34,488 crores in 2023. The numbers are phenomenal. And similarly, if you see the net profit, it is an increasing trend from 2,173 crores in 2019, and presently it is at 4,101 crore, which is almost been doubled and has given a very good profits for the retail investors. The earning per share, it is at 22.48% in 2019, and presently it is at 42.83. And the return on equity has been consistent, 22.76 in 2019, and presently it is at 25.67. So if you see the shareholding pattern of the company, promoters holding 52.63 percentage shares, foreign institutional investors holding 17.02% shares, domestic institutional investors having 10%, the others holding 20.32 percentage. So if you see, the key point here is the percentage of pledged shares, which was 11.08 percentage in 22 March 22, and presently it is at 7.41. So this need not have to be worried about, because anything which is pledged more than 25 percentage is a cause of concern. But for a company like Asian Paints, retail investors need not have to worry about it. So if you look at the balance sheet of Asian Paints, March 2019, it was having a reserves and surplus of 9,375 crores, and presently it is at 15,896 crores. So which has been really, really good. Further to note that the cash and cash equivalent was 444 crores in 2019, and presently it is at 844 crores. So these are the most important stocks, and which has been actively trading stocks in Nifty 50, which has given a very good return and good profits for the retail investors over the years. And these are the stocks which are really worth considering investing for long term. And if you really like the inputs and contents of this video, Please do click like button and do subscribe to our channel for more such informative videos. Till then, take care.